Welcome to the deep dive. We're here to cut through the noise of those dense financial reports and pull out the real nuggets of knowledge for you. Today, we are diving into Mastek Ltd. They've just announced their unaudited results for Q1 of fiscal year 2026. And these are hot off the press. The board literally approved them today, July 18th, 2025. Our mission, simple. We'll unpack the key numbers, the strategic moves, and, the story behind the figures. We want to help you get a quick, solid grasp of what really matters in this latest update, find those aha moments. So let's get into these results.
Okay, diving straight in. Mastek's consolidated revenue from operations hit Rs 914.7 crore. Now, the key thing here is the year-on-year growth. That's a strong 12.5%, or if you look at it in U.S. dollars, it's 10.4% growth, reaching $107.4 million. Quarter-on-quarter, the growth was a bit more moderate, 1.0% in rupees, 2.6% in USD.
Okay, so top-line revenue looks pretty healthy, definitely growing year-on-year. But what about the bottom line, profitability? That's often where the real story is.
It often is. And yeah, here it gets quite interesting. Net profit after tax, or PLATI, jumped to Rs 92.1 crore. And this isn't just a small increase. It's up a significant 28.7% compared to last year. And even quarter on quarter, it's up a very healthy 13.5%.
Wow, okay. So revenue's up, profit's up even more. What about operating profit? EBITDA.
Right. Operating EBITDA came in at Rs 137.3 crore. That's up 10.8% year on year. Though, interestingly, it did dip slightly compared to the last quarter, down about 1.0%. The operating EBITDA margin landed at 15.0%. That's a small dip, 31 basis points. And management basically said this was down to, ongoing investments in talent and building capabilities. And just to round it out, the diluted EPS earnings per share was Rs 29.4 for the quarter.
Okay, that's quite a few numbers. If you had to simplify it, what's the main takeaway for someone trying to get a quick grip on Mastek's financial health this quarter? It sounds like, yes, revenue growth, but the profitability jump is maybe the bigger story, even with those investments you mentioned.
You've really hit the nail on the head there. The main aha isn't just growth, it's profitable growth. Even while they're consciously investing in things like talent, they're boosting that bottom line significantly. It suggests they're pretty confident, willing to invest now for potentially bigger returns later, rather than just squeezing margins right now.
That makes sense strategically. So how does this performance tie into what the leadership is saying? Where are these investments going? Is there a clear strategic push?
Absolutely. The CEO, Umang Nahata, called it a steady quarter, but really emphasized their focus on sustainable and profitable growth. And here's where the AI narrative really comes into play. It seems to be a huge focus. They mentioned finalizing over 10 AI deals just this quarter. And that's across both generative AI, the kind that creates things, and agentic AI solutions, which are more about AI agents taking actions. Apparently, these are already bringing significant productivity gains to their clients. And what's really notable is a new strategic partnership they announced with a company called OpenAI. This is meant to seriously level up Mastek's own AI capabilities and power their internal AI platform. They're focusing it on software, security, DevOps, SRE, that's site reliability engineering, keeping things running smoothly, and ML itself. The goal, they're framing it as delivering better, faster, secure outcomes for clients. They also mentioned their A.PT.AI solution, launching over 80 AI agent assets and more than 100 real-world business use cases.
That's fascinating. They're not just talking vaguely about AI potential. They seem to be showing concrete applications. Can you give us a feel for some of these projects? What are they actually doing with this AI focus?
Yeah, good question. Because that's where you see the impact, right? So, for instance, in government and financial services, they got a one-year extension with a UK central government agency. They're managing and improving a national biometrics platform using Agile methods and, importantly, DevSecOps, integrating security right into development. And they also won a strategic project with the UK Central Bank, helping modernize data and analytics for monetary policy decisions. Pretty critical stuff.
Definitely high stakes. What about other key areas like healthcare? Are they active there too?
Oh, absolutely. In healthcare, they won a strategic deal with the UK Healthcare Authority. They're building components for a new regulatory platform using CRM dynamics. Think of CRM. Customer relationship management, but adapted for complex regulations. Then there's an American healthcare provider, one managing Medicare Advantage plans. They chose Mastek's ADOPT.AI solution for their Oracle Cloud systems, aiming to modernize back-office functions. And another one, a big Fortune 500 clinical research company in the U.S., is using Mastek for AI-led automation to streamline clinical operations. So yeah, lots happening in healthcare.
Wow, okay. Those are really diverse, impactful projects. They seem to be going beyond just, standard IT tasks into really core transformation work.
Exactly. And you see it in retail and manufacturing too. There's a really compelling example with a UK edtech provider. Mastek is modernizing over 80 complex old client-server applications using their AI for technology.
Mhm.
And the results they're claiming are pretty impressive. 60% effort savings, nearly 99% functional parity with the old systems, and the first part went live in just 5 months.
5 months for modernizing 80 app. That's
It
fast.
sounds incredibly fast, yes. Shows the potential power of these AI tools when applied correctly. They also mentioned Oracle Cloud wins HCM for a European manufacturer, EPM for a multinational food and beverage company.
So these aren't just one-off projects. It really feels like part of a bigger strategic push, right? Focusing on these deeper transformation deals.
You're spot on. They seem to be deliberately targeting these more complex, high-value engagements. And that shift actually shows up in some interesting operational numbers, like while they added 12 new clients this quarter, their total number of active clients actually went down. It's now 323. That's down from 348 last quarter, and even more from 391 a year ago.
Hmm. That is interesting. Fewer active clients, but revenue's growing. And you mentioned the backlog is strong too. What does that tell us? Are they intentionally focusing on fewer, bigger fish?
That seems to be exactly the strategy. It suggests a pivot towards um, deeper, perhaps longer term, more substantial contracts with a smaller number of larger clients. It's kind of moving away from maybe smaller, more commoditized work towards that high value consulting space.
Yeah.
The idea would be increased stickiness with those key clients, maybe better pricing power.
Makes sense. But doesn't that also increase risk if you lose one of those big clients?
It does. That's the potential downside, yeah.
Yeah.
Concentration risk definitely goes up with that kind of strategy. But it seems Mastek feels they can manage that through strong relationships and, like you said, that robust order backlog. That 12-month backlog grew again. It's now RS 2,347.9 crore, or about $274 million, up over 8% year on year. So that provides some cushion.
Okay, that backlog figure is reassuring then. What about headcount? You mentioned investments in talent, but did the overall numbers change?
Yes, the total employee count actually decreased. It's down to 4,824. That's lower than last quarter's 5,058 and significantly down from 5,546 a year ago. Attrition was mentioned at 19.5%. This could tie into that strategy shift, maybe needing a different skill mix, focusing on efficiency, or perhaps just market dynamics.
Right, could be a combination of factors and geographically. Where's the growth coming from? You mentioned the UK wins.
Exactly. The UK and Europe segment was strong. Revenue there was RS 583.18 crore, up nicely both quarter on quarter and year on year. The CEO specifically called out strong performance in healthcare and government services there, which lines up with those client examples. North America, though, saw some challenges. Revenue was down quarter on quarter to RS 211.34 crore. Management acknowledged headwinds in some accounts, but did stress that the pipeline and backlog in North America remain strong. So maybe a temporary dip. The AMEA region, Middle East, Southeast Asia, India, etc., also saw a dip compared to last quarter, down to RS 120.9 crore.
Okay, so a bit of a mixed picture geographically. Strong in the UK, Europe, facing some headwinds elsewhere, but the overall strategy seems to be driving that backlog growth. What about their financial health overall, cash position, any other flags?
Their cash and cash equivalents were at RS 549.0 crore. That is down from RS 622.2 crore last quarter, so something to keep an eye on, perhaps related to those investments or working capital. And one important clarification. The standalone financials, just for the parent company, showed an exceptional loss of RS 42.32 crore. This was due to an impairment of investment in subsidiaries, basically, an accounting write-down on the value of their investments in their other companies. But crucially, management stated this has no impact on the consolidated results we've been discussing. Those consolidated numbers reflect the whole group's performance.
Okay, that's a key distinction. Good to clarify. And are there any external signs that this strategy, particularly the AI focus, is being recognized?
Yes, quite a few actually. They highlighted several recent industry recognitions. Gartner positioned them as an emerging specialist for Gen AI engineering in emerging markets. Everest Group named them a major contender for healthcare data analytics and AI services. ISG recognized them for Snowflake partnerships. IDC called them a major player in industrial IoT. Avasant a challenger in higher education. Quite a list.
So it's not just Mastek saying they're good at AI and digital transformation. These external analyst firms are seeing it too. That adds some weight, doesn't it?
It definitely does. While you always take these quadrants with, a grain of salt, they do reflect analyst research and often client feedback. It suggests their investments in strategic direction are getting noticed and validated in the market. And speaking of validation and stability, there was also news on the leadership front.
Oh, what was that?
The board reappointed Mr. Suresh Vaswani as an independent director for a second 3-year term. His background is really impressive, decades at places like Dell Services, IBM Global Technology Services, and he was even on the board and co-CEO Wipro, plus degrees from IIM Ahmedabad and IIT Kharagpur. Having that kind of experience and continuity on the board is pretty significant, especially when a company is navigating a strategic shift like this.
Absolutely. That signals stability and deep industry knowledge at the highest level. Okay, so if we zoom out, it really feels like Mastek is making a clear bet, leaning hard into specialized, high-value services powered significantly by AI. They seem willing to accept fewer clients, perhaps even slightly lower headcount for now, to focus on bigger, more impactful, and potentially more profitable engagements.
That sums it up perfectly. It's a strategic refinement, moving up the value chain, betting on depth over breadth, quality over quantity. They're navigating the dynamic external environment, as management put it, by doubling down on their execution focus and those deep client relationships, aiming for that sustainable, profitable growth.
Right. So there you have it, our deep dive into Mastek's Q1 FY26 results. Key takeaways: solid financials overall, really strong profit growth, major strides in AI with concrete deals and partnerships, a growing backlog, all happening alongside this interesting strategic shift towards fewer larger clients, particularly strong in the UK and Europe.
It's a fascinating picture of a company actively reshaping itself, banking heavily on AI and deep partnerships to drive future success.
Which leaves us with a final thought for you to chew on. Given this clear move by Mastek towards fewer, larger clients and a heavy emphasis on advanced AI capabilities, how might this kind of strategy change the game in the wider IT services market over the next few years? And what could the ripple effects be for other industries as they increasingly adopt these sophisticated AI-driven solutions? Something to think about. What aspects of Mastek's approach might apply or perhaps not apply in your own field?